Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. I'll post a link to Jordan's website below. But Jordan, we're going to be talking about the precious metals, and you know what? We have a bit more, I think, positive comments to talk about here because of just how aggressively gold has moved, really starting at the tail end of last week on Friday. Gold opened the day at about 1631, moved up almost $50 higher, and then actually had some follow through more yesterday on Tuesday. But Monday was also a slightly up day. But again, we've moved almost $100 here in gold in a matter of 3 trading days. Jordan, I have to ask you, in a broad sense, when you're looking at this chart, is this a breakout in any way for the gold price?
Hey, Corey. I mean, it's a breakout with respect to, I'm looking at the chart over the last month. I want to say 1670 or so. I mean, that level. It broke above that level. So if you're looking at a 1 month chart, there is a bit of a breakout there. But otherwise, I think you're referring to the trend lines, and some people have been drawing trend lines incorrectly, I would say.
There's a lot of people saying that this is a breakout. We're off to the races. So that's more what I'm trying to convey over to you.
Oh, yeah. Well, no, because I mean, in that respect, no. I mean, it's a breakout. Looking at the last month, we've broken above 1675. My general thinking with, calling breakouts and such is, you got to look at horizontal resistance and those types of levels. That's really more important than trend lines. I mean, in most cases, breaking trend lines is not that significant. You really need to It has to be a break after testing a trend line. Like it can't just be like one or two or three or four times. It really has to be numerous times that that trend line is tested before it breaks. So, I mean, I have seen some of those, but no, I mean, it's ridiculous to say it's a breakout. I mean, we haven't even looking at the daily chart. I think 1730 is another important level. It hasn't even broken above that. That's just full on ridiculous. I mean, maybe gold has put in a bottom and the cyclical bear market has ended. I mean, that's another question, but I don't think gold is going to be off to the races quite yet. I always try and marry the technicals and sentiment with fundamentals, and the net spec position to me is a little too high. We didn't get down into single digits like we had at the 2016 and 2018 low. I mean, that's okay. It doesn't necessarily have to go that low, but if you look at that, there's still going to be some speculators in the market taking profits here and there, or selling on weakness, so that can exacerbate some weakness. The fundamentals are really important, and I think that, of course, I mean, that's an obvious statement. Of course, fundamentals are really important. What I mean is they're really important to formulating a real sense of where the market could go. And we're not quite, I mean, we're close to the end of the Fed tightening, basically. I don't think anyone can dispute that. I mean, we're close to the end. There might be one more, 75 or 50 point hike, but we're close enough to the end that that's a good thing for precious metals. However, we're not close to easing with respect to, we're not going to see Fed easing in the next month, 2 or 3 months. Maybe we could see it in 6+ months, depending on what happens with the economy. So there's that. I tend to think that gold is not really going to get going until the market can sniff Fed easing. And unless stuff really falls apart quickly here in the next couple months, then it could take gold some time to really get going. But with all that said, it is possible that the worst could be over for gold, and that it's put in a low here around 1620.
Okay, so it sounds very much like still kind of a basing pattern here, but a much stronger base that's put in. Another thing that I've been reading from some other so called technicians out there is that gold really stopped out right around this 1620 level. If you look at the spot market, it was 1622. That was back in late September. 1621, that was late October. And now 1618. Is there such a thing as a triple bottom that we could be forming here?
Yeah, I mean, if you look at the daily and the weekly charts, you can see it. However, if you look at the monthly chart, Well, you can kind of see it on the monthly chart, but not really. A triple bottom is a thing, but I would say that in this respect, it's really not significant enough by itself just to say, oh, that's a triple bottom. That's super bullish. That means gold's going to go that much higher. So that doesn't really factor into my analysis.
Okay, let's also talk about silver because silver that is a better looking chart, at least on that daily chart to me, simply because that low at the very end of August, 1740, we've put in consecutive higher lows, 1740, 1790, 1801, 1881, and now silver's back above 21. What's your outlook for silver here?
Yeah, it's really interesting. If you look at the weekly chart, I mean, silver started to carve out a bottom before gold. We know that it's been leading gold, and that's never a bad thing for this sector, especially when you're coming off lows in particular. The key for silver is really the $22 level, and on the monthly chart, it looks much better. So, but I do want to see how is it going to close this month because if silver were to give up these gains and sell off into the end of the month and you get like a doji for this month, then the monthly chart won't look as strong because the last month also had a doji. So and that's with respect to the candles. But 22 is really the major resistance and the really significant level that silver is going to be dealing with shortly. But nevertheless, I mean, if you look at a daily or weekly chart, I mean, it's clear it has constructed some kind of a bottom. It's leading gold, it's coming out of it, but we'll have to see how it does around $22. And at the same time, what interests me, in the first answer, I was talking about fundamentals. What interests me, or I think what is going to be the issue for silver over the coming months, is if conditions turn more recessionary, silver it could lose its leadership against gold. Now, I'm not saying that's necessarily a bad thing for the sector because we want to see things as gold bugs and precious metals investors, we want to see things go that route that really favor gold because eventually silver will do well. But what I'm saying is here and now, it looks like we're in a bit of a situation where there's worries about stagflation more so than recession, and we're seeing energy and base metals get a bid, and gold has been doing well. But in that kind of environment where energy, base metals, and commodities are outperforming gold, silver is going to outperform gold in that environment anyway. So if as long as that environment continues, silver will outperform and do well. But I'm a little worried that next year, if we get to a point where the market starts to really discount recession, I'm worried that silver could, and it doesn't mean it has to go all the way back down, but it could lose its leadership against gold. So it's leading gold right now. It looks like it's put in a good bottom, but 22 level is really important. And fundamentally, we'll see the macro situation, how silver handles that if it turns more recessionary.
Okay. Jordan, let's move over to the gold stocks. Then let's start off with GDX. We can also tie in GDXJ, but those have also moved quite strongly, again, off of or starting on Friday. The charts also look a little bit better than that gold chart, considering that whole triple bottom for the gold chart. The recent bottoms for GDX have been generally higher than the low at the tail end of September. Let's start off with GDX. Are you seeing a breakout here? What are you watching in the chart?
Yeah, I mean it's interesting if you look at the daily charts are really really encouraging. I mean the weekly charts are looking better. In the daily charts you kind of have this inverse head and shoulders pattern, but then when you look at a weekly chart, it's really less visible. And so it's important to look at multiple time frames. But nevertheless, if you look at a weekly chart, I mean, you can see that the miners have been building some kind of a bottom. And so if I'm looking at the weekly chart for GDXJ, for example, that has resistance, I think, around 37. And if you look at the 200-day moving average, comes in just a few pennies below 37. So there's a confluence of strong support there. I'm looking at it right now. I mean, you could potentially have a measured upside target to 38. So GDXJ could, I mean, potentially move to 37 or 38 if this move had some legs. Same thing with GDX. I know that GDX has a confluence of resistance around 30. 30 is a significant level. And if you look at the 200-day for GDX, it's exactly at 30 right now. Looking at the miners charts, I mean, you could say yesterday's strength was a breakout, especially if you're using closing prices. So I think we're seeing positive action here. I mean, even if the miners would pull back more, that really wouldn't concern me that much. I think they've put in strong support around these lows in the last couple of months. And I think the probability here probably favors this move continuing to the upside and GDX getting to 30, GDXJ getting to 37. Those are the levels I would focus on. So we're seeing really good things in the miners. And of course, this comes on the back of lots of things we were talking about in the last month or two. The miners are starting to lead. The advanced decline line is showing a positive divergence. All these things were building up, and the action in the market had not reflected that yet, at least in the price. But we've seen it in the price in the last day or two. So looks good for the miners. I mean, there's a good chance we could see some more upside here into the end of the year.
Okay. Yeah, even GDX I'm seeing right around that 27 to 2750 level as another one where earlier this year there was a bit of resistance there. So we'll see if the GDX can break through that. A quick comment regarding that move higher on Friday. There is a gap in the daily chart for GDX, GDXJ that is a gap of a few percentage points. Any worry about this gap? Does this gap need to get filled? How do you view this gap?
Yeah, that's a really, really good question. I think if you look at significant bottoms in the gold stocks, you're probably going to find quite a few gaps in there. I need to go back and look at the 2008 and 2016 lows, but I think in years past, when I looked at the day-to-day action, I think when the market rebounded and just kept going, I think it left some open gaps there. So gaps are frustrating. If you think the market's going to come down, and I mean it might, you never know. There has to be more of a reason than unfilled gaps. So we'll see. I mean, if this continues to push higher in the next week or so, after a little consolidation, that would be a really good sign. In other words, I mean, looking at GDX, if we see GDX pushed to 28, 29 in the next week or two, I mean, that might be a signal that there's too much strength here to worry about the gaps filling. So that's how I look at it.
Okay, final comment then. When we look at the individual stocks, as we all do, hold a lot of individual resource stocks, and I think a lot of people listening, including myself, also hold a lot of the juniors. Are you seeing a bit of capitulation here between either majors to juniors or development companies to majors or juniors? What are you seeing within some of the individual stock moves?
Yeah, that's a very good question. And, I was making this point in the last couple of updates that I did for subscribers, in that you look at GDX, GDXJ, the Huey, or even SIL, SILJ, all those sector indices, they were building out these bottoms. They were looking pretty good. Yet, if you look at various individual juniors, some of them had some declines on volume that really stands out, and I think that's capitulation. There can just, for whatever reason, a big holder of some of these stocks can decide, I've had enough and I'm going to sell, and I don't really care at what price. I'm just going to get out of the market. And so I think that has hurt more than a handful of individual juniors. When a big holder just at the end of this bear market, they're just, I'm not going to say they're panicking out, but it hasn't worked out and they just want to get rid of the position before next year. So you could see a little bit of that tax loss selling in a few juniors here and there. I don't look, if the larger miners and those indices are going to continue to rally, they'll pull up the juniors to a good degree, I think. But nevertheless, at the same time, here and there, you could see some capitulation, some large holders bailing out of these stocks. And if these are juniors that you really like, they're cashed up, they really have a bright future, I mean that's a buying opportunity. I mean, yeah, that's a benefit to you. And so I would jump on that weakness rather than worry that, oh, well, this weakness is, this is indicating something could be wrong with the company. I mean, and it's not a blank answer for everything, but I just think that's something to keep in mind with a lot of these individual juniors. They could succumb to tax loss selling and a big holder bailing out, and that could be a reason why they're weak and not following GDX and GDXJ.
Yeah, fair enough. Cash in the bank right now is key, but you also need to dive into the work that the company's doing and make sure that it makes sense and make sure that the market has a potential to care about it. That's the other aspect. Just because you might care about what the company's doing, make sure it's falling in line with what a broader investor base is also looking for. Jordan, thank you as always for your time. Great chatting with you. Nice to talk a bit more positively about this sector. We will chat again next week. Hope you have a great rest of your week.